right, so I'm just gonna do a macro review. This is my speculation. I'm not a financial advisor, but I do day trade and I also invest. So what I'm gonna do is basically break down what I think is gonna happen for the rest of the week. CPI reports are coming out, so if the consensus is higher than normal, that means cost of goods, consumer price index, right? That means things are more expensive what they're supposed to be, so that could tumble the market. So I'm going to look at the S&P 500. I'm going to look at the NASDAQ. I'm also going to look at the Dow Jones along with some currency pairs. Okay, so I'm just going to hop right into it. You're going to notice that this article is basically saying that the fear gauge is flashing a warning that stocks could be about to fall off a cliff. So, basically we have the VIX, and I'll just show you the VIX on my chart, right? So we have this chart right here, and it's basically a fear meter. And it's basically hitting a resistance area. So if you look at resistance, each time it comes up, you'll notice that the stock market tends to fall or hit some sort of low. So right now we have the CPI coming out tomorrow, 12:30 p.m. And if the consensus is the CPI is higher than normal for the month, this could potentially make all of the markets tank. And the crazy thing is, if you're looking at the S&P 500 with me, guys, you're going to notice that I drew up basically a support area, and you're going to notice that it is broken. So this was the last point, and I'll just circle it right here for you guys. This area right here was basically a support area. And then in the future, so where current price is, price broke, came back up a little bit, but then continue to break below. So what that means is basically price is broken below this support level. And so that typically means that this is more of a bearish move. Same thing with the Dow Jones, right? So you're gonna see that, let me just get rid of all these drawings really quick. So very similar, if I draw up a horizontal and just look left, you're going to see this was the last support area. So this is basically a clean break and retest. You're going to see, let me mark this yellow really quick so you guys can actually see it. So clean break and retest, right? Right here, and then a continuation down. So if it does continue to go down, we're looking around a 26,400 arena. And where I'm getting that from is basically looking left in history, right? So the last time it was at 26,400 was around October of 2020, okay? So what this means is if I pull out my short indicator, you're gonna notice that this is basically around almost 10% drop, right? So I'm not saying that's going to happen overnight, but just looking at the overall market, you can tell that it is bearish, right? So anybody that has 401ks and things like that, obviously we're in a correction, right? We're in a downtrend. So you can definitely see that this is a bearish market. And then on top of that, you're going to also see the NASDAQ doing something very similar. So guys, I'm on the daily time frame, so it's very macro, but trends don't lie, right? And especially with inflation and Russia, things aren't getting better. Things are actually getting a little bit more volatile over there. So if things get worse and people start freaking out, let's say NATO starts getting a little bit more aggressive, that can definitely shake the markets up, because people are basically not wanting to deal with Russia, which could cause more turbulence in Europe, which cascades into the other markets. So right here, you can tell that this is the major support area on the daily time frame. The last time it hit its all-time low was over here, basically of September 2020. So if I zoom in on the 4-hour time frame, you're going to notice that it's basically breaking below, right? It's breaking below this major support level, right? And should continue on down. So do I want the market to continue to go down? Well, no, that's not good for everybody, because most people have 401ks and they're basically invested and have a big basket of assets. But if you're an everyday day trader, right, this is a good thing to do, because now you can invest in things like SQQQ, which is basically a short ETF, exchange traded fund. And that would actually be in the opposite direction. So when the NASDAQ is going down, you're going to be able to see things like SQQQ go up in value, right? So if it does break, so if the NASDAQ is broken, right, then you should see an inverse relationship with SQQQ. So the NASDAQ, everything is basically on a downward projection, and it's hitting a floor. And right here, you're going to see SQQQ hitting a resistance area. So if the CPI is higher than normal, we can see a potential break to the upside. And then looking left in history, right here, you're going to see that SQQQ went up to $83. So guys, I mean, this is just fundamental breakdowns of how the stock market moves. In August of 2022, the price was at $32. And now it is at $64, right? So that's literally a 100% increase. So if you do the math, if you have $10,000 in your Robinhood account or your Webull account, you would have basically doubled your money. So there's this myth that you can't make money in a bear market. That's not necessarily true. You just have to find the right tools. You have to find the right assets and ETFs, so you can actually work smarter and not harder. So if you're serious about this, go ahead and comment that, this is something new that you learned, or maybe, you do day trade and you want to just get a little bit better at your technical analysis. Just hit me up. I have all the links in the description below. But yeah, that's all I have. Hopefully, the fear index doesn't go way up, but it's really dependent off of the CPI, right? So if I read this off to you, it says the U.S. Federal Reserve has a dual mandate of maintaining price stability and maximum employment. Inflation should be around 2% year over year, and has become the weakest pillar of the central bank's directive ever since the world suffered a pandemic. Price pressures keep rising amid supply chain issues and bottlenecks, with the consumer price index hanging at multi-decade highs. And that's because, in my opinion, it's simple supply and demand. When the federal government prints over $10 trillion, there's going to be a delayed reaction, right? So the CPI basically showcases that, the cost of goods are going way up, but in all actuality, the value of the dollar is weakening, because let's say, for instance, you have more money in circulation. Well, the value of anything that, if you go to Walmart, right? Let me just compare this to bags. If you have a Chanel bag, right? It's very limited. There's not a lot of circulating around. But what if Chanel made a deal with Walmart, and everyone was able to get Chanel bags for a cheaper price? Well, what's going to happen is, over time, the value of Chanel is going to go down, and nobody's going to even want to buy Chanel anymore because it's not exclusive. So that's kind of what's happening with the dollar, in my opinion. It's just basic supply and demand. And there's a delayed reaction. Every time the federal government prints money, that's when inflation comes around, because there's more money being spent, and devaluation happens. So I'm done with my ramble. Hopefully the markets do not bleed, but if the CPI ends up being on the higher side, I definitely see the markets continuing to go lower. That's all I got, guys.